Hello, Richard Morris here from Morris Succession Lawyers. Been a big week for taxation, and trusts in Australia have been a little bit quiet of late, just snowed under with work, but obviously need to do a video, I think, given what's happened this week with the budget. I've already had a few inquiries from clients, advisors, accountants, just wanting to get my thoughts to date just in terms of what came out from an estate planning perspective. Obviously on LinkedIn there's been some terrific summaries that have already gone up, some great videos explaining how the new changes are going to be affecting bucket companies. Obviously at this point in time, when it comes to trying to run a discretionary trust with a bucket company sitting underneath, soaking up distributions, with the way that the government's proposing to structure these new tax reforms, the effective tax rate for bucket companies is going to jump substantially, well over, I've seen various reports from anything just north of 50% to close to 70%. So I think we can safely say that bucket companies are well within the sights of the government, and I don't think that it's necessarily going to be a strategy that's going to work once these reforms come in. Whether they stick, I'm a little bit of a cynic in the sense that if a government has access to additional tax revenue, even if the coalition's saying that they may not, or they intend to repeal a lot of what's proposed once they're in government, I think we'll just have to wait and see whether that happens. At this point in time, it certainly looks like trust distributions or discretionary trust distributions flowing through to a bucket company probably going to be something that can't be used for a little while. There was definitely a surprise to see testamentary trusts caught so far. I think we need to see the actual detail of the legislation, but at this point in time it looks like if you've got effectively a non-discretionary trust within a will, say you've got something fairly straightforward in terms of a sum of money set aside for one beneficiary when they turn 18, 21, 25. Those types of fixed trusts don't appear to have been caught within the higher taxation changes, but when you get to a discretionary testamentary trust, these on first blush look like they're going to be caught up in the family trust type arrangements where you've got a flat tax of 30% at the trustee level, which from everything that I've been reading is obviously going to lead to a much higher taxation level for individual beneficiaries that are underneath that. So it's, unless you were earning a very large salary, it's probably not going to be effective to make distributions to other parties within that discretionary trust structure. I'd like to think that this is a massive change away from what's happened in the past, where you might have had beneficiaries of a discretionary testamentary trust. So if you've got the estate here, which the funds then flow down to a testamentary trust, the beneficiaries of the trust might be child one. They may have children who are, let's say, 10 years old and 5 years old. Previously, we could have distributions made from the trustee of the testamentary trust to these minors, and they were afforded the adult tax-free threshold as accepted income, which might be about $22,000 a year, tax-free. That made these types of structures extremely tax-effective for trustees of testamentary trusts, along with the additional asset protection measures that you get from having a testamentary trust, whether that be potentially segregating matters from a divorce or property settlement, and also providing beneficiaries with creditor protection from bankruptcy, insolvency, that sort of thing. I think there's still a place for trusts. We'll just need to see whether or not, when the legislation reaches its final form, whether those measures are going to be watered down or whether they'll stay more or less as the government's proposed. I would like to think that it's probably something that would be on the chopping block if we did have a change of government, and potentially maybe something that might be watered down before the legislation actually is enacted. So I think it's a matter of watching this space. I've had a lot of clients very interested in terms of how that's going to be treated. I think at the moment, certainly from my perspective with how we draft our testamentary trusts, there's always a need, in my view, to have a level of flexibility so that if there is something like this that comes out down the track, you have the ability to either avoid the testamentary trust structure, or you can look to distributing to a fixed trust. You could distribute to a corporate beneficiary, and that bypasses a discretionary trust, discretionary trust structure, which is obviously caught on the face of it by these new proposed changes. So I think it's a matter of just waiting and seeing. We've got flexibility built within our documents, certainly something that we're going to need to keep a close eye on. The other thing that really caught my eye as well was the removal of pre-CGT exemptions. I certainly hadn't been seeing anything like that as far as indications that might be popping up. That's a substantial change away from what we've had in the past. And again, I think we've just got to see what the final form of these changes are. Obviously, the Labor government's taken a fairly broad brush approach or radical approach to change what's been in place, for better or for worse. So we'll just need to see what happens there. But for the moment, I think bucket companies certainly look like they're not going to be effective moving forward. Testamentary trusts, I think it's still something that we need to wait and see, but you do still have some asset protection advantages of having a testamentary trust structure. If you've got a beneficiary who's potentially a bankrupt, having that option to pay to a different type of entity certainly is not going to be without use, and it's something that I think moving down the track next couple of years, even if it isn't watered down in this set of changes, I'd like to think that we'll see a return sometime down the track, because it's really something that doesn't benefit testators. You're looking at doing something that would only benefit generations down the track. It's not something that the individual taxpayer benefits for themselves. That's something that's been previously not caught up in this type of discussion regarding family discretionary trusts. So I think it's a matter of wait and see, and I'll try to keep abreast, and if I've got any further update on the matter, I'll be in touch. But if you want to reach out at any point in time, please feel free to contact me or the team at Morris Succession Lawyers.